The dollar versus the Swiss is moving sharply to the downside. There's talks of a new trade deal between Switzerland and the U.S. Imminently to be imminently announced. It's certainly well rumored. That would bring the tariff rate down from near 40% for Switzerland down to 15%. This Trump administration getting concerned about some of these random tariffs they applied to countries in there with the worries of the Supreme Court, perhaps. But in any case, good news for the Swiss franc, and that is being shown in the price action. I'll talk about the technicals driving this currency pair in this video, so let's get started. Recall from yesterday, the price of the dollar versus Swiss was trading right near the 200-hour moving average when the news came out of that the idea that the tariffs would be reduced, and we ended up pushing below that 200-hour moving average, moving to a new session low for the day. In the Asian Pacific session, however, for whatever reason, the price had rebounded back to the upside and retested that 200-hour moving average. We initially moved a little bit above that level in the Asian session, but it's since pushed it back down, and as you can see, it's been pretty much a free-for-all trade near the lows for the day and breaking below the 80 level in the process here, currently trading at 0.7995. So that's a big move to the downside. In the process, the price is also moving below this swing area through here, which had a swing high here, swing high right here, trade above and below through here as the market tried to figure out what it wanted to do, and then reestablish support and then resistance against this area before moving to the downside. We return back to that area through here, push down, and then broke above it, basing against this level before moving to the upside. So breaking below this level right here, came down to the low of it, came back to the high of it, and then rotated to the downside. Breaking below the 80 level in the process is driving the pair to the downside. We also broke below the 38.2% retracement of the move up from this low right here, which goes back to September, to the high price here. That 38.2 comes in at 0.8017. So the point is that this area right here is now resistance for the dollar versus Swiss. As long as the price remains below this area right through here, the sellers remain more in control. Where could they go? The next obvious target would probably be this 50% retracement level. That level also happens to correspond with this these low prices right through here, and close to the high price right through here. So 50% comes in at 0.79758. That would be the next key target on the downside for this currency pair, with momentum continuing. Taking a quick look at the 4-hour chart, I wanted to look at this chart because you see these two moving averages right here. That's a 100-bar moving average on the 4-hour. This is a 200-bar moving average, and we are trading now below those levels. So we are making a break, which is, if the momentum can continue, would be significant note here. 2 weeks ago, the price moved up to that the higher of the moving averages, a 100-bar moving average, found willing sellers, then based against the 200 for the most part, and moved to the upside when we came down to the correction here. We did the base against the 100 before moving to the upside. So here we are back again at these moving averages, and we are moving below those levels as we speak. Currently traded 0.7991. If the price were to get back above these moving averages, get back above the 80 level, and also get above this swing area, then the dip buyers here would be feeling a little bit more confident. Alternatively, if we start to see the price start to tick below this level, I'd expect the buyers against this level to turn to sellers, so be aware of that dynamic as well. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.